Okay, so today we are going to be looking at the fiber, the Euro USD, to try to make sense of what is happening. And we're going to be looking at this from the higher time frames from D1, which for me represents the price action for the year. And then we'll probably drop down to 4 hours, 1 hour, and then also we'll talk about the um, patterns because everything is patterns at the end of the day. What pattern can you see on the chart right now? I know you might probably say that this is too zoomed out, but or rather too zoomed in, but no worries. As I always say, don't concentrate on the candlestick patterns, that is the formation, but rather concentrate on the price action. What is price telling you? Is it bullish? Is it bearish? Where is it heading to, where is it coming from, and so on. And you really don't need to see the candlesticks or bar chart formation to be able to decide that. You could switch and zoom, make it bigger, obviously, to make it more clearer for you for entry. That should strictly be for entry, but well, that's just me. You could do it anyhow that you want to. So first things first, looking at it from this daily time frame, I'll first of all start by saying whether it's on the daily or 4 hours or hourly or whatever, I tend to use what is known as flip zones. Flip zones is an area that has acted as support and then also has acted as resistance. It tends to have, that high probability that when price gets there, there should be a reaction. And even if there's no reaction, the other side should then react. That's what price tends to do. And of course, price is what helps us to get our support, resistance, supply, demand, head and shoulders, QM, Q and M, and so on, right? So, with that said, let's just dive in quickly to this Euro USD, and then we'll drop down. By the way, somebody asked for a video for me to explain how I look at, the drop down analysis from D1, 4 hours, and so on. I would still try to do something more precise, strictly on that, using a few examples and all. But for now, the more videos based on how I look at the market, using these things should also help. So for this week, right? Oh, by the way, happy new month. This is the 2nd of June. Wow, the first half of 2025 more or less already, gone. And it makes us wonder, time indeed is flying. How is our trading? How was it last year? How is it this year? How is it going to be towards the end of the year? Okay, so now I'm going to show you guys something, flip zones for me. Always look to the left. Now, looking to the left, you could see we have some reaction here, which we could call like resistance. Here to resistance, you can see some resistance, resistance. You can see we're only seeing resistance so far. Resistance, more or less resistance, resistance. Then here, support. We have some support here. So we can clarify this as a flip zone. Resistance, support, resistance, resistance, right? So remember we said you would also always see support resistance. And my levels will obviously be different from yours, but it doesn't matter as long as it's more or less in the same area. Now you can see I don't have too many things on my chart as well. You might decide to put more lines on your chart. It's up to you. Because if I have a look now, I could probably see something around here. Something around here. If I put a horizontal line representing my support resistance, where we could have like a form of resistance, 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 and then support. That's another flip zone. But I just put a fill, which is for my eyes, especially for clarity's sake, based on where price has left and where price I would like to see price going to. So also just a quick one, you can see some form of resistance, support, some support here, some resistance, resistance, resistance. So remember I said flip zones is what I use personally to identify my levels because it tells me that price happened that something happened at that price level, most likely something should happen when it gets back there. That's what we normally say. History tends to repeat itself and so on, right? So, apart from what I have just, taken some time to show you over there, let's also pay attention to what's happening right now as we are talking for Euro USD daily time frame D1. If you look closely here, right, mine is squashed really tiny, but at the same time, hmm, can't you see some sort of head and shoulders? Head and shoulders, and also Q and M. QM is Quasimodo. I'm going to explain. Here you have like your left shoulder, you have your head, and then if price gets back to this area, which we more or less can say, remember I say area, I don't say price point. So price has more or less gotten back to this area. You could say maybe you could still push high and tap it much better. But we have an area here which should more or less be the right shoulder. Now I also call this QM. QM because for a pattern, for a chart pattern, this is how the head and shoulders looks like, right? Where you have the left shoulder, the head, and then the right shoulder here, where traders can easily enter on the right shoulder, retest on this left shoulder, and then drop. But also don't forget when it comes to head and shoulders patterns, the left shoulder, right shoulder don't necessarily have to be 100%, right? And that's trading for you. But then QM is pretty much similar to head and shoulders pattern. But in this sense, when you have this here as the left shoulder and you have this point here, for QM, it states that price needs to drop past this level here, and then on approach here is where your entry will be, which is more or less the retest of the left shoulder, right? Of course, say price should get to the head over here, then you can, cancel the head and shoulders pattern entirely. That means that it is failed. It's a failed head and shoulders pattern. So you can see the slight difference from the head and shoulders and the QM Quasimodo pattern. You can go to Forest Factory or do a Google search on QM and Head and Shoulders, and then just have a look at both of them. They're both very powerful at the same time. Now for this one here, where we can see potential QM, potential Head and Shoulders, I have this area here, this here as a supply, and you can see price came back here. I actually got an entry here last week. We sold here, price went down. We're trying to hold for it to drop lower to this point. Well, here might be a bit of a stretch, but you could always have like your TP1, TP2, and so on. It's up to you, right? But we got an entry here to sell. Price went down to this point and then pushed back up. Now price is back here. This area is still pretty much valid for sellers. The trend for this year started from here. The trend for this year is to the upside at the end of the day, but it needs to pull back. Price needs to pull back, even if it's going to push past this 1.1570 area, right? If it's going to push past that, price needs to pull back because price tends to use, pullbacks as like a launching pad to push higher and so on, right? So from this area here, where I personally, as a trader, I'm interested in selling in this area. So what I would normally do, we've been talking about the D1 strictly. What I would normally do now in this point in time, I will drop down in time frames to the next 1 to 4 hours and then look closely. What can I see? Is there any clue? Is there anything here that can give me that, reason to pull the trigger where it is here or even higher? Now this is where, remember I said pull the trigger. So pull the trigger is now where you can now decide, okay, let me zoom in and let me see the candlesticks pattern. We zoomed out here. Now let me zoom in to see the candlesticks pattern. And then while investigating, I can see something now. Interesting. We had this big candle pushed to the upside. Now we have what? We have an inside bar and inside bar. If you know about dips, DIB, double inside bars, double inside bar. This looks like more like a doji, spinning top or whatever. Now in this area here on its own, it more or less could be a good enough signal to pull the trigger to sell. As a quick disclaimer for you guys watching this video, hopefully you watch it on time because I'm going to post it up on the YouTube channel immediately. Now, as a disclaimer, if you place your trade here, please know where to set your stop loss. Ideally, while using candles to enter, your stop loss should be above this candle here, right? You could put it some pips above the candle here, or it could be above this right shoulder here. It doesn't mean that price could not still push higher. Take out your stop loss here or take it out here. But because this area is more or less a hot area for me, I don't mind pulling a trigger here. And if it pushes higher, I'll wait and see what formation it gives me here to pull the trigger. And this is on the 4 hours time frame. So you can see that we have dropped from the daily to the 4 hours. We can decide to drop further to the hourly time frame, and let's see what we have on the hourly time frame. Interesting. Now, I said interesting because looking at this, you can see on the hourly time frame, it looks what? It looks like a very nice uptrend, meaning that you're looking forward to selling this. It simply means that you are a counter trend trader. We could have a form of divergence here. Don't you agree? You could pull up your MACD oscillator, or you could pull up your RSI or whatever oscillator that you use for uh, uh, divergence. You could have a divergence here, very possible. And then divergence here could have made you to pull the trigger. This is 1 hour time frame. We can still drop down further. You drop down further, you might even say something. You might see your traditional candlestick patterns in the likes of the hammers. In this case, the bearish hammer. You could probably see a bearish hammer here on the 30 minutes, 15 minutes, 5 minutes time frame or whatever. You could even see an engulfing over here. There's information over here, even in that on that wick that we can see, this wick, this thread, there's information there on the lower time frame. You could drop down to the lower time frames and then see what it is telling you and how you can use that to pull your trigger. I still have possible formations that could still form in this area for me to pull the trigger. Now, in this sense as well, I'm going to show you guys something because your eyes, you should train your eyes to see some certain things. And I'm going to show you guys this. What do you think this is? What do you think this is? And what do you think this might be? Trading is all forecasting. We're doing forecast. We're all doing a form of what's another word for that? It's sorry, the word it's not coming to my mouth yet, but we're doing a form of, we're forecasting, we're trying to predict. Let's put it that way. Here, left shoulder, head. This could be a potential right shoulder where price will come back to. Look for an entry here in this area. Drop down time frames, 30 minutes, 15 minutes, 5 minutes. But don't forget, the lower the time frame, the noisier it gets. So you could drop down time frame and then from here, get an entry with discounted what? Discounted stop. That means that you could have a very small stop loss, or maybe like 10 pips, and then you get your entry here and you hold it all the way down based on the daily targets. So you can see dropping down with time frames, one major advantage, one major benefit of dropping down with time frames is that you can get good reward. Assuming you place 10 trades and only one happens to be a winner. That one that is a winner, imagine from here to here, this could easily be at a risk to reward ratio of 1 to 20, 1 to 10, 1 to 15. It will cancel out those losses that you had initially. And that's why I would always say that your risk management is very, very important. It's going to help you for your psychology, for your emotions, right? So based on what we have here, this is something very powerful. So you have your potential stop loss, you have a potential take profit. Obviously, this is not the take profit. It could even be lower if I switch back to the daily time frame. But this is just to show you based on these lows here. That's why I just picked this here. Based on these lows here, this is a fantastic trade on the Euro USD. Another thing I would always tell traders, right, is pay attention to what's happening based on the news. Check the calendar. That should be the first thing you should always do. Check the calendar. Oh, today is Monday. What do we have for the dollar? Oh, what do we have tomorrow for the dollar? Oh, what do we have on Wednesday for the dollar? On Thursday, on Friday? Do we have, oh, we have the non-farm payroll on what? On Friday. As you can see, non-farm payroll, right, is high impact news. And then we have a lot of USD news coming out today, and this week rather. So that could give you heads up that we might probably have some volatility, right? Just pay attention to that. That would also help your analysis, and that will help you to set your stop loss appropriately. That will help you generally, right? So I'm going to be running up this video. I didn't know it was going to take this long, but it's not about the length. If you could watch like a movie for like an hour and a half, or maybe even 2 hours, and in that moment, you watch the movie, you feel good. What about in this moment where you can watch like a 10 minutes, 15 minutes, 20 minutes educational video that could easily be, I won't call it a signal, but can easily be as a form of, live market analysis. Let me put it that way. Live market analysis that you can use and benefit from. Because trust me, if you can get an entry over here with a small stop loss and a massive take profit, how many of these kind of trades do you think that you need in a week, in a month? How many do you think you need in a year? That happen to be, the winners, because they're going to have losses as well. It's inevitable. So these things that we're talking about here, no matter how long the video is, take your time, watch it, learn. I'm also doing these videos because, they say the more you teach, the better you get. So that's why I have been doing, education for a long time. Speaking of education, if you are watching this video, even if it is, not on time, you're watching a video at a much later time, you can always pull back the chat for the update of what happened over here, right? Because price could still go back to the highs on that daily time frame, right? Price could still go back to these highs. Let me just quickly show you that and then I'll round up. Price could still go back to these highs over here. And if that is the case, then we can call this like a double top here, and then we look for potential entries. But for now, this is the area that we're paying attention to. And we're looking out for discounted entry to probably give us a take profit all the way down here. That would be a nice, if I do the calculation, that'll probably be a nice 500 pips. And your stop loss might be like 10 to 20. So trust me, this is fantastic, right? So if you are watching this and you're interested in learning how to trade, maybe you're a beginner or you have been doing this for a while and you have not, gotten the right footings, I have a course that you can subscribe to, or if you're interested in one-on-one hand holding or whatever the case may be, reach out and then let's see what we can do together. Okay, thank you guys. Let me round up this video now, and I'll do an update for you to see what happened in this area. Okay, thank you and goodbye for now. Cheers.